Today's guest is Bob Zarlengo. He's a partner with Zarlengo Robb, LLP, CPAs and Business Advisors in Wheat Ridge, Colorado. Thank you to Zarlengo Robb, CPAs and Business Advisors in Wheat Ridge, Colorado for providing a location for us to film this episode. At Zarlengo Robb, they think like business owners. For more information about Zarlengo Robb, please click the link in our website show notes. Hi, I'm Norman A. Hood, financial advisor and host of the Exit Plan Show. I interview America's top advisors like Bob Zarlengo to help business owners like you enjoy more personal freedom, grow their companies faster, and transfer ownership seamlessly when the time comes. Today's guest, as I said, is Bob Zarlengo of Zarlengo Robb in Wheat Ridge, Colorado. Bob has more than 4 decades of experience in the public accounting industry. Hey, welcome back to the show, Bob.
Well, thank you, Norm. I'm happy to be here.
Well, today we're going to talk about increasing a business owner's cash flow so maybe they can leave a little sooner than what they'd hoped.
Okay. My experience has been is most closely held businesses are priced based on the discretionary cash flow that's available to the owner.
Okay.
And so whatever you can do to increase that, it increases the value of what they'll ultimately realize when they leave it. It's kind of a catch-22 though, and I'll be upfront with you, and that is you get started with the business. This happened to me about 2 years ago where they were struggling a little bit. We started doing a few things to increase their cash flow. It started picking up, and they said, okay, we're looking at something down the road, maybe 9 to 12 months. 9 to 12 months, I get back in touch with them, or maybe it was more like 8 months to start planning for the event, and I got the response, well, I'm making so much money, I don't want to leave. And so that's why it's a catch-22. And but cash flow definitely drives value.
Okay, good. So there's different tools, as a CPA, you use different tools on Exit Planner to analyze a business. Can you talk just a minute about a horizontal analysis and how you use that?
Yeah, in most businesses, the providing a financial statement of the most recent period is very indicative of what the business is doing, but it doesn't necessarily give a buyer a warm, comfortable feeling in the sense that, well, was the last 12 months an anomaly, or was it actually indicative of what's going on? And so you can do things. One of the first things I always do when I analyze a business is create a spreadsheet that's going to have anywhere from 3 to 5 years activity on it. In some of the journals and stuff, that's more commonly referred to as a horizontal analysis.
Okay.
And you can determine what the relationships are to the prior periods. You can determine what the relationships are to sales in this period as well as in the prior periods. And so it's a very useful tool because it gives you a whole bunch of information at a glance or on one page.
Okay. Hey, do you ever watch Shark Tank?
Once in a while.
I know a lot of our viewers watch it, and I have some clients that watch it. But it always fascinates me how they're doing a horizontal analysis in their head. Somebody comes on and they say, what's your cash flow, and they'll say, okay, well then what was it the year before, and what was the year before that, and that's just like doing it live.
Right. And the other thing about the horizontal analysis sometimes is we'll tend to do a weighted average of like on the P&L, so that if we can get a number for what's the net income, we'll weight it to give more weight to the most recent period than the previous periods.
Yeah, that makes sense.
Seeming that would be more indicative.
Right.
And then just before we get off this, the other reason that we'll spend a lot of time doing this is that a lot of small businesses don't have formal projections.
Oh,
and so the assumption is what's happened in the past will repeat itself, and so that's why we try to look at something that makes sense.
Okay, good. And so how does that compare to another tool called a vertical analysis?
Well, the vertical analysis is more looking at the individual period for that that you're looking at. So maybe if you're analyzing a business today, you might look at the historical 12 months or the historical leading or trailing 12 months, okay, because people don't always sell their business on the last day of their year, and so to do the analysis, we might look at the trailing 12-month deal. The vertical analysis allows to look at what specific expenses relationships are to each other and what they are to the sales number.
Okay.
And then you take that information, you might compare it to the industry to say, okay, you're doing real good with this company, but your rent is at 20%, and most of the companies in this industry are 10%. And I know you own the building, but that's something we're going to have to adjust for to normalize income.
Okay, good. Okay, and the other areas, accounts
receivable is business owners don't tend to pay a lot of attention to that unless it's a recessionary period.
Okay.
Because everything's going fine, and business can grow. Receivables can grow, and they don't pay a lot of attention to it. One of the value drivers that I talk about when I look at a business is days outstanding in receivables. And when I sit down with the business and we're tracking them quarterly, I'll look at that every quarter. And so that if it starts to creep up, then we'll do something to fix it. And so it's because the longer they have your money, the longer. Or it's costing you whether you realize it or not. One of the things with closely held business owners is a lot of times mentally they get to the point, once they made the sale, they're happy. Wow. And the sale's not consummated until it's converted to cash.
Yeah,
cash is king. If you leave with nothing else today, Norm, realize cash is king.
Okay, good. That's good advice. You can go to the show notes on our website for more information about Bob and Zarlengo Rob. At the end of this video, you can subscribe to our free newsletter, download free guides, and have an opportunity to win free books from Amazon.